Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, we're going to be having a look at where Bitcoin may well be heading next. We have our next target to the upside at 110,000, but we also have the price action and the long-legged doji candle, which I mentioned last week, which may well be having pressure to the downside at around about the 92,000. We'll do a full analysis exactly where Bitcoin seems to be heading over the coming days and weeks, and we'll fit that in with the 60-day cycle, as well as looking at the wider markets and the overall picture of what's going on in the news that's driving the Bitcoin price. And if we've got time at the end, we'll have a look at the strategy that we're following here and the main things to look out for in order for us not to get off the Bitcoin train before it's due time. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, so we're going to go straight into the theme of our video today, and that is where next for Bitcoin? Is it going to be 110,000? Or is it going to be down to the 92,000, which is the lower range of this long-legged doji candle that we've got here? So last week, I mentioned this long-legged doji candle, that it has the power to actually affect all of the subsequent candles, and why there's a very strong chance that we will have a consolidation here after a big move in a short space of time from 66,000 all the way up to 104,000. So far this has been playing out, and just last night we had this breakout to the upside of that 104,000. So currently we've reached 106,500 as the high. And the question is, where is the next target for Bitcoin? In terms of the 60-day cycle, the end of the cycle was here on day 59, and currently we're on day 42 of the current cycle, which ends on the 3rd of January as the 60th day. Because we've still got quite a bit of the cycle to go, we really have two narratives that are building up here. The first thing is to have a look at exactly where the targets are going to be and why 110,000 is the target. So as you'll know from the last week's video, we did this target here based on this neckline of 73,800 and taking the measurement from this consolidation's bottom here at 49,000 to that neckline, and then whenever this breaks out, we can put this measurement at exactly that point here, and that gives us a target of around about $110,000. So this is our next target where we would expect some sort of a pullback for Bitcoin. And the question is, can we get to 110,000 before we get to 92,000? And that 92,000 is really at the bottom of this long-legged doji candle, which means that if this turns out to be a fake out with so much of the cycle to go to the 3rd of January here, so the two narratives really are that this is a fake out and we're going to come back very, very shortly and retest the bottom of this at 92,000. So that's the first narrative. If this turns out to be a fake out, and this long-legged doji candle does have that characteristic of causing fake outs both to the upside and to the downside. So if it does come to the downside, it increases the probability of this being a fake out down to the downside, which I would expect it may well wick down to 88,000 to the bottom of these support and resistance points here. So these are the things to look out for. If this is a fake out, then we have a very good probability to come back into this range and to test the bottoms of this range. And the only pressure that's preventing that from happening is that if you look at these bottoms of these candles, we're getting a rising demand line. So the pressure is that whenever we're having some sort of a dip, it tends to get bought up very, very quickly. So this is what's negating and invalidating that particular narrative. So there's quite a lot of forces going on, but these are the probabilities that we do have a good chance of coming down to 92, having a fake out to the 88 before going back up again. The second narrative is that we don't have a fake out here, and that we go up to the $110,000 mark. And because we've had a right translated cycle early on in this particular cycle, then we make an early end of the cycle here and come back and retest these levels one more time as a support before we go into the new year towards the inauguration in the USA on the 20th of January and to make new higher highs here. So that's the two narratives that I see playing out over the next few weeks. If this is a fake out, then expect a big move to the downside, even testing the 92,000 or even lower here. Or if we do make it to the 110,000, then expect some sort of a pullback down here. And that pullback from the 110, wherever it's going to top out, maybe it might go a little bit higher to 111, but the Fibonacci from the bottom of this candle at 92,000 to the 110,000 would suggest that the 100,000 at 50% Fibonacci seems to be the most likely support level for the end of the cycle if it was to play out that way. So these are the two narratives. Keep in mind, it would make sense for it to come back to the 100,000 once we reach 110. Some of you with a keen eye may well have been looking at the RSI down here, because as the price has been moving up, what the RSI has been doing is being flatlining here. So there is a little bit of a mild divergence going on between the RSI and the price action. But there is an opposing force that is actually playing out with the Bitcoin price and the RSI, and that is that on the RSI, on the lower side here, where we get the hidden divergences. So currently, if you take it from here, with the RSI, you can see it's on a lower slope, whereas with the price, it's on a higher slope. So there is hidden bullish divergence going on, while at the same time there's a mild bearish divergence on this side here. So it really is a very much a mixed picture that's going on with Bitcoin. So probability wise, it really is 50-50. My inclination would be that the power of this candle, generally speaking, when it plays out, it does give you fake outs to the upside, in which case I'm erring on the side that this is going to come back down and retest the lower 90s at least anyway, if not the 92,000. So let's see where it goes. And if we move on to the wider markets to see exactly what's driving the Bitcoin price, we can see that there is optimism growing that the US may use Bitcoin as a reserve currency. And this particular news seems to be driving a lot of the demand for Bitcoin currently. And a similar story here saying that this could happen from day one, from the 20th of January. And we also have MicroStrategy wanting to start buying Bitcoin and their first purchases above the $100,000 mark. And this may well underpin the price going forward. So quite a lot of interesting news going on, which has been underpinning the Bitcoin price as well as driving the price forward to the current high of 106,000. And if we have a look at the liquidation heat map, to have a look at the range of prices that we can expect for the Bitcoin price to be operating in. And then what we've seen here, largest zone at the bottom is this one here at 101,000. So while the current price is at 104,000, we may well revisit 101,000 shortly. And on the top side, there's not many strong zones at the moment. The only one really is here, where it's just been to at the 106,000. So this is the range we may well get over the coming days. But when we look at the ETFs and the asset inflows and outflows, again, this is painting a very buoyant picture of what Bitcoin is doing in terms of the demand. And we can see that the holdings of Bitcoin, the inflows over the last 7 days for BlackRock's IBIT here is still powering ahead at just over 15,000 inflows of Bitcoins. The only meaningful downward pressure is really from Grayscale as per usual, with about a loss of 1,500 units, but most of that is taken by their mini trust here, which has got lower fees, which has taken most of the 1,500 in terms of the inflows here of 1,400 Bitcoins. And as you can see with the red numbers, they're not really very meaningful compared to the 15,000. So there is a huge demand from ETFs still continuing, which is driving the price for Bitcoin moving forward. And if we look at the wider markets, firstly looking at the dollar, so far it seems to be playing out as expected, with a rejection here at around about the 107, 108, based on the resistance that we've got here. And you can see with the RSI, we may well get a retest of that, causing a double top with a bearish divergence on the RSI, which would be giving us a very strong clue that this is going to come back down to much lower levels. So the dollar really setting up to allow the markets breathing room to move to the upside in the coming weeks and months. And if we have a look at the SPX, we're coming into the mid-cycle here. So we do expect this fall, as we've been saying over the last few weeks, that we should expect some sort of a mid-cycle fall here before we go into the second phase of the 60-day cycle here to make the new higher highs and cause a right translated cycle, which is all part of the bull run that we've got with the SPX. So this looks like it's powering ahead to much higher levels. And as we've seen with the dollar, that's giving a lot of oxygen for the SPX to move forward to much higher levels here. And if we move on to gold, on the daily chart, we can see that we're into this symmetrical triangle. We've got two support lines here and two resistance points here. So it's just a matter of weaving in and out of this triangle. And as you would expect this to be a continuation pattern, I am expecting gold to break to the upside and to continue with the bull market. And as we've seen with the dollar, this is more of a higher probability than the bearish case. And we can see with this gravestone doji candle here, it came all the way up to that trend line, got rejected, and has been pushed back down here. So the pressure is to the downside to come and retest the lower levels here before the expected breakout. So always keep a lookout for these types of candles. Like we mentioned at the time here, that this is now telling us that this is going to have a move to the downside. And this is exactly what's happened. It's come back to the tops of these candles, found support, and this consolidation is very much a healthy sign for the gold to continue to the upside. Similarly for silver, they seem to be going hand in hand, and we can put a triangle here. So silver too should be breaking out to the upside in the coming days and weeks. Okay, just want to move on to the CME futures market and see that we've got a gap forming from last night where the market went up higher than the Friday's close, and the top of that gap is at 102,605. So we would expect with a higher probability for this to be actually filled up. Now we do have a gap down here, as you may well have noticed, and not all gaps get filled in, but if we do have a deeper correction, then there is the magnet of this particular gap. But as we've seen in previous cycles, once we get into the parabolic phase, these gaps that develop usually get filled in the bear market. So what these are giving us is a clue that in the next bear market, wherever we go to the top side, we have a very high chance of coming back at least to this level here at around about 78,000. But this is only a small gap, so you would expect it to be filled maybe today, maybe tomorrow, in the coming days. But certainly 102 is still on the table here, and that may well fit into the narrative of currently having a fake out from the long-legged doji candle. And many people requesting me to have a look at the Bexit indicators on a regular basis, which is absolutely fine. Last week we had a look at the Puel multiple and showed quite clearly that we are nowhere near the top of the bull market. And today I'm going to have a look at the Maya multiple, which currently sits at 1.51. So this is the green line, which is at 2.4, and you can see that all of the previous cycles have topped out at above this 2.4 level. So this is the minimum we need to get to, and currently this is the 2.4. This is where we're at. And we can see there's quite a large gap here, just like the Puel multiple. And it's these types of indicators that are driving my strategy going forward in terms of trying to ride out the Bitcoin bull market until there are indicators and signs to tell us otherwise. One of the biggest mistakes people can do in a bull market is to get off the Bitcoin train too early. And some of these Bexit indicators that we've got, that we've been using here at the Wisdom Bites channel, they should provide a very good guidance based on the historical perspective that when there's a confluence of those indicators, that should be a very good guide for us to know that the market may well have topped. So far, all the indicators we've had a look at, such as the Pi cycle, such as the Puel multiple, and today the Maya multiple, they're all pointing in the same direction, that there is still quite a lot of the Bitcoin market to ride up to much further higher levels. Okay, this brings us nicely to the strategy part of what I wanted to cover today, because I do get questions about when the best time might be to buy up Bitcoin while we're having this big move to the upside. So the kinds of things that I would be looking at is that when you're in a parabolic phase of the bull market, this is really not the time to outguess where the tops will be and the big pullbacks might come from. This is the time to add on the dips. And the question is, how do you add on the dips? So I'll show you that on the daily time frame of where the appropriate times are. If you haven't already got into Bitcoin and you want to get into Bitcoin, those are the opportunities and the entries that you may well want to consider. So far, what we've really got, if you've been watching my channel, we got in right at the bottom here and been dollar cost averaging around the 17,500 and the 15,000. So these are the two areas where we got in with the Bitcoin miners. But if you invested with Bitcoin or the altcoins, that's absolutely fine, because the whole idea in terms of the strategy was to capture the whole of the cycle from the bottom of the bear market here to wherever the top is going to be. So instead of trying to second guess the tops and the bottoms and get in and out, the main idea was to capture the whole of this move here. So far, what we've done is to capture the whole of this market from the end of 2022 to where we find ourselves currently with Bitcoin here. Now, going forward, what we really need to do is, and I've shown you this in the last few weeks, that if you want to get off at the top of the bull market, then there is a point at which you really shouldn't be adding and increasing your average price for Bitcoin. And that was based on the Wall Street cheat sheet here, that when you get into a bull market like this, that there will come a point where if you start adding to these levels here, then the expected fall, which will be sudden and quite deep in order to shake the market out, that will mean that whatever you add along the way at the top of the market and increase your dollar cost averaging price of the Bitcoin here, then you may end up losing quite a bit. So there will be a point, as I mentioned previously, at which point I wouldn't be buying Bitcoin in order to safeguard the profits that you may well have made along the way here. And that was based on the Pi cycle, which is the 111 simple moving average, the green line, and the red line, which is the 350 simple moving average. Once the price gets above the red line of the Pi cycle, which is currently at around about 130,000, and obviously this is a upward sloping line, so by the time we get up there it could well be 150,000. So that will be the trigger for me anyway, that if I was trying to buy into Bitcoin, I would stop buying Bitcoin and dollar cost averaging higher from this point onwards. And whatever you make here will then be more than likely safeguarded by that particular strategy. So until you get to the red line, those people who are thinking of buying and asking when is the best time to get on board, the simple method that I tend to use is to look at the 21 simple moving average on the daily chart. So if we move to the daily time frame, so the yellow line here is the 21 simple moving average. So as you can see, since we broke up above the 73,800, what you'll find is that in the rest of the bull market, the price will go up above the 21 simple moving average, but periodically it will return back to the 21 and find support on numerous occasions. And currently we're just above that 21. So this is where, if you wanted to buy the dips, to use the 21 simple moving average, which currently is at about 99,000. If the price does come back to the yellow line here, that is your cue that the price is going to bottom out around that level. And of course it can wick below it, but you can see that it very rarely closes below the 21 simple moving average, especially in the parabolic phase of the market. So if I was buying into Bitcoin and waiting for the price dips, this is where I would be looking at in order to secure an entry or to add to my existing positions. And the whole idea of following a strategy for the 4-year cycle is to actually capture the whole of the cycle. Now, not many people want to do that, and that's absolutely fine. If your strategy works for you, then that's much better than any other strategy that other people may be following. So as long as your strategy is working, and I can only share what my strategy has been all the way along here for the current 4-year cycle, is to capture the whole of the move from the bottom of the bear market to wherever the top is going to be. And then at that top, people can decide whether they want to get off the Bitcoin train and wait for the pullback which is expected and then rebuy back at that point. Or, as many people have stated in the comments, they would rather just hold Bitcoin for the longer term, i.e. to ride the highs and the lows of the 4-year cycles as well. And that's absolutely fine. If that's what you're comfortable with, then that's what you do. My own strategy is actually to get off at the top of the bull market, wherever that's going to be, guided by the Bexit indicators that we've got. We've got about 6 or 7 of them. So whenever they show a confluence that we've reached the top of the bull market, that will be my cue to get off. Now, I may only do that with 25%, 50%, or 100%. I would rather leave that decision based on what we do up here and how far we go. And that's based on our strategy that we've always had, and that is based on being open, fluid, and flexible, and let the price of Bitcoin and let that dictate our decisions, options, and choices, rather than make a preemptive decision and get stuck with a stubborn view, which may cost you in the long run. In these markets, emotional decisions very rarely ever pay off. So just be always very careful and let the price actions dictate your decisions, your choices, and your options. Okay, so we're going to leave it there. Nice and short video today. If you found value in the video, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.